superfluous. One explanation of the business cycle I've heard that I found really useful was one that compared it to what happens when you overestimate the number of bricks you have. Let's say you have enough bricks for 5 houses. Then what happens is you have a bean counter who says, we have enough bricks for 7 houses, and you listen to the bean counter and assume he's correct. Thinking you have enough bricks for 7 houses, you then start 7 home building projects. This is the building boom. People are living high. They think everything's just great. Oh my gosh, we're going to have 7 houses. I mean, we're going to retire off in the Caribbean and all that stuff. But as the projects go along, eventually it becomes clear that there aren't enough bricks. So you then have to scrap 3 projects so as to have enough bricks to complete the remaining 4. So you had the boom, and now this is the bust. Why scrap 3 houses instead of only 2? Weren't there enough bricks for 5 houses? Yes, there were. But the problem is that you can't recover all the bricks. A lot of the bricks can't be recovered, and so you can only build 4 houses instead of 5. Because some bricks get broken in the recovery process. And you would have been better off if the bean counter didn't overcount. If the bean counter says you had enough bricks for, let's say, 20 houses and you undertook 20 projects, the situation would be that much worse. Money is a representation of goods and services in the economy. Printing more money is the same as saying, we have more stuff, and the result is the same as overestimating the number of bricks. Let's say you have $500 billion worth of deferred consumption, also known as savings. This is excess production that people have chosen not to buy stuff with, and so they leave it in a bank, right? They produced a bunch of stuff, and so they got their, money that represents this production, but they didn't go out and then get stuff back. And so they produced a bunch of stuff, and so now you just have stuff out there, and there's just these notes, sitting in a bank, right? And so they produced stuff, but they didn't take anything back. That's saving. And given all of the possible lending possibilities and what is a typical return on investment versus the $500 billion in the bank, the interest rate is at 5%. That is, if your business venture won't return 5%, the bank won't lend you any money because you can easily get 5% from other people. And if your business venture isn't returning 5% on the loan, isn't paying off the loan, then the bank will call in your loan because there are other people who can earn 5%. Now, if 5% is too low and everyone starts gobbling up the credit and the bank starts draining reserves and the bank realizes, oh, people can make more, then what they'll do is they'll raise the interest rate until they reach some sort of equilibrium. If 5% is too high and nobody's taking out loans because nobody can get 5%, on their business, then banks will lower the interest rate until people start taking out loans again. But this is all dependent on there actually being $500 billion worth of deferred savings out there. Real physical stuff that people actually produced but then never bought. Okay? And hopefully you can see that the banks are actually rather powerless in determining the interest rate. The interest rate is dependent on how much people save. It's dependent on how much actual deferred consumption actually exists in the real world. I cannot stress this enough. The money is just a representation of this deferred consumption, of this people producing stuff but then not buying it. So what happens when the Fed pumps money into the economy? Well, let's say they print $200 billion more dollars and loan it out to the banks, and the banks are willing to get it at 3%. What this is the Fed saying there's $700 billion worth of deferred consumption, and since there's $700 billion, the banks are willing to lend at 3%. I'm just making numbers up here. And so then you have banks loaning money for $700 billion worth of projects. And oh, it's so great. People are flipping houses. It's boom time. I'm going to retire early. I'm going to get a ranch in Colorado. Oh, it's just fantastic. But what's this? There isn't actually $700 billion worth of deferred consumption out there. As the projects go along, businesses realize that there isn't really $700 billion worth of actual savings out there, and that the loans they were giving weren't based on actual stuff, but on just printed money. And so they end up scrapping $300 billion worth of projects to save the other 400 billion. Why? Because the 300 billion projects that were scrapped, there were some unrecoverable costs, there were some sunk costs, labor. Okay, that's the boom and the bust. And this is government. When you give people a monopoly on violence, they do all sorts of crazy crap. The reason you use dollars, which they can just print off, is because you are required to accept dollars. These are legal tender laws. If you refuse to accept dollars in your establishment, bad things will happen to you. Is this unconstitutional? Of course. The Constitution, however, doesn't sprout wings and grow fangs and attack people who violate it. The Constitution has been in turmoil since 1794. Saying something is unconstitutional means about as much as saying this government program goes against the morality of a dream I had last night. Right? And these legal tender laws is the only reason this crap happens. And expanding the money supply cannot expand the economy any more than claiming you have more bricks will result in you actually having more bricks. It will result in inflated expectations and the boom and bust with a net loss in the end because because you weren't able to plan correctly, and there's some sunk costs that can't be recovered from the bust. This boom and bust is often referred to as the business cycle, as if it's something natural. It's not. It's not a business cycle. It's a printing press cycle, and it's caused by government. This didn't occur until government got control of money, until central banking, and it's founded on the fact that they will throw you in prison if you don't accept their funny money. And what burns me up is that this business cycle is cited as a reason we must have government regulation. Right, that the governments are wild, and so we have to have regulation. It's like the parent who poisons her child's food and then cares for the child when he's sick, which makes the child think it needs mommy. Right? And so the government poisons our economy and then claims this is another reason why we need it.